Why I shouldn't invest in SCHD. Hey, how goes it? This video is going to be the case against SCHD. So you're thinking of joining the SCHD cult, but you're hesitant and you want to hear a voice of reason or different train of thought to avoid confirmation bias, or at least not hear from an echo chamber. Let's go ahead and take a look at SCHD's dividend profile. The current dividend yield is 3.65%. The payout ratio is pretty healthy at under 50%. The annual dividend growth rate is 5.7%. And in the most recent quarter, the dividend payout was 65 cents per share. Now, it's important to note that SCHD is a portfolio of 104 different holdings. So the dividend yield that you see is a blend and a reflection of all of these different companies. Now, the index fund itself was born in 2011 at about $25, $26 per share. And since then, it's just been increasing at a very consistent pace, minus the pandemic sell-off when SCHD reached $40 per share, which is the same price that it was trading at around 2016. Now it's currently sitting at about $71 and it's trading sideways. Now, looking back at the past 10 years, in 2013, SCHD paid 90 cents per share every year. And since then, it's been growing its dividend at a rate of 5.7% at a consistent basis. And as of last year, each share paid out $2.56 per share. Now, here are the reasons why you want to avoid SCHD. But before we get into that, there are some things that I wanted to call out. The expense ratio is pretty cheap at 0.06%, and they calculate and subtract that from your gains. This is negligible. Don't even worry too much about the expense ratio. And currently, there's roughly 676 million shares outstanding. There's 104 different holdings, and the turnover rate is 26.97%, which basically means the rate at which the fund managers add and subtract new holdings into the portfolio. The PE ratio of the index fund is 14.34. Now, here are the reasons as to why you want to avoid SCHD. Reason number one, when you buy an index fund, you buy all of the good with all of the bad. The ETF follows the Dow Jones Index, which includes Broadcom, ticker symbol AVGO, Verizon, ticker symbol VZ, Amgen, which is like a pharmaceutical company, Coca-Cola, Pepsi, Merck, which is another pharmaceutical company, and AbbVie, which is another pharmaceutical company. And over here, you can see a breakdown of the distribution within the portfolio itself. So the biggest and largest holding in SCHD is Broadcom. Do you believe in Broadcom's future? Do you believe in Verizon's future? Which leads me to reason number two as to why you should not invest in SCHD. You do not believe in some of the companies. Maybe you like 5 or 10 or even 15 of the companies within SCHD. But what about the other 90? When you buy into SCHD, you're basically believing in the entire portfolio. Maybe this does not sit right with you and you feel conflicted about it. So maybe you are knowledgeable about UPS right here. It only comprises 3.63% of the portfolio. These other ones, you don't believe in, you don't like, you don't even consume the products. I mean, as I just scroll down, just think to yourself, maybe out loud, or maybe even comment down below, which of these companies do you actually believe in? Because when you buy into SCHD, you're basically signing up to say, yeah, I believe in all of these. Like, I personally have never heard of OG Resources. What does this group even do? Maybe you're against smoking, and you don't like the idea of your money being invested into a cigarette company. This is Altria. Or maybe you like to buy and drive reliable vehicles such as a Toyota or a Honda or a Lexus or a Jeep. Why would you invest in Ford? Maybe this is your thought process and thinking. Be honest with me. Do you actually believe in the investing thesis of Robert Half, which is a staffing employment agency? Can you actually go to sleep at night on time without tossing and turning, knowing that you are invested into the Bank of Hawaii? And remember, there's 104 different holdings within SCHD. As you go down this list, if you can't say yes to a majority of these, then you have to question yourself am I making the right decision? Which takes me to reason number 3. The dividend yield isn't high enough, and you want at least 4% or even 4.5% because the federal funds rate right now is hovering at around 5%. You're thinking logically and rationally, and you're saying 3.65%. Well, hold on. If we look at companies such as UPS, their dividend yield is 4.26%. Or if we look at another dividend darling, Realty Income Corporation, their dividend is sitting at 5.66%. So you're saying, hey, 3.65%? That's not good enough for me. Which takes me to reason number 4. I should not invest in SCHD because it takes the fun out of hunting and researching for a good company. Buying SCHD and then forgetting about it is just too boring for you. You would rather be more hands-on and be active in knowing what is happening with a company that you actually invest in. Please be honest with me again. Do you actually know what Stewart Info Services Corp does? Or Kforce? Or First Commonwealth Financial Corp? Who are these companies? What are these businesses? You are the type of person who likes to know where they put their money. How are you supposed to know when to buy more of Wendy's if you just don't know anything about Wendy's? Instead, you're just putting your money into SCHD. And when you do that, you might be buying into Wendy's when it's at its 52-week high and it's overvalued. With SCHD, by buying into 104 different holdings, you don't get to choose. You don't get to replace. You don't get to add. You get one option, and that's SCHD. Reason number 5. You would rather buy the winners and not the losers. So why would I buy SCHD? I just want to buy Pepsi. I have no interest in buying anything of Texas Instruments. So why do I have to buy Texas Instruments? You say to yourself before dinner, and you know that your wife does not care at all about the stock market, that you love Pepsi and that you believe in its business and its operations and its future. Because deep down inside, you only want to buy stocks and companies with the potential to compound harder than the market rate. Companies that you actually believe in. And it's not just because you enjoy eating tortilla chips with pico de gallo every Sunday, but you actually like Pepsi. However, with SCHD, you're looking at annualized returns of about 12%, but you're the type of person who would rather risk it to get 22% gains in a year by going all in on Pepsi. Reason number 6, when you invest in SCHD, you actually miss out on special dividends. Because an ETF like SCHD, they do not distribute the special dividends. Sometimes companies give a totally random special dividend that's usually worth about 400% of the normal dividend payout. For instance, like Cracker Barrel, right? One of my most favorite companies and restaurants that I like to eat out at. Sometimes you get a normal dividend payout of about $1 per quarter. And other times, you actually get a special dividend of $4 just because. And yes, this is absolutely a true story. So when you factor that into the dividend yield, it's not actually sitting at about 6%. When you factor in that special dividend, the dividend yield is a lot higher. With SCHD, you're not seeing any of that. The last reason as to why you shouldn't invest in SCHD. There is no flexibility to add more shares when a specific company has buying opportunities, like when it's on a dip or when it's at your ideal buying price from running financial and valuation intrinsic models. You buy SCHD at the price that it's at. You take it or you leave it. At the end of the day, I think SCHD is just okay if you really like dividends. But personally, it's not my cup of tea because if I am forced to do index investing, I would rather just go all in on VTI or VU, which are both Vanguard index funds, with VTI being all of the US market and VU resembling the S&P 500. By the way, I don't know if I said this already, but SCHD closely follows the Dow Jones Industrial Index. So instead of doing index investing, what I do is I try my best to pick the winners and invest heavily into those companies. So if SCHD has 104 companies, I wouldn't bother believing in about 85 of those companies. So why would I invest in them? I would rather just invest directly into the companies that I understand and to the companies that are doing well financially, operationally, and with an economic moat. Anyways, if you are a part of the SCHD cult, then I am sorry. Do whatever it is that turns you on. As for me, I'm going to go eat my dinner, which is leftovers from Thanksgiving. This has been another episode of Dividend Compounders with Cheese, signing out. Stay safe, and I'll talk to you next time.